You're listening to chartingwealth.com for Monday, the 2nd of November, 2015. Welcome to the new month, a whole new month of trading. And we can see that the markets, the overall market represented by IYY, is continuing to move up. It actually crossed over going up. And I'll describe everything that we see on the charts for those listening on the audio podcast. Don't forget you can always get our video by just going to chartingwealth.com and signing up for it. We'll send it to you every day. You can sign up for our email list. You can also check out our Facebook and Twitter feeds because we post the video there every day. And we would just appreciate hearing from you. So what we have going on is we have a confirmed up move. We're above the 2-day trend line on the 2-day chart. Confirmed up move all the way back from the 5th of October 2015. We continue to move up. We can see the derivative oscillator losing a little bit of speed. And we still have a nice difference between what we call a divergence between the blue MACD moving average divergence line and the signal line. We'll see a crossover of that line, the blue going over the red. It, of course, is a confirmed down move. We are far from that on the 2-day chart at this point. Nice open green candles going up, which again, we just have top wicks, so we have strong up movement on our charts. But we did have a down day for the total market on Friday, down about 0.5%, 0.43%, and again, that's 0.43. If we drop back and look at the 4-hour chart, what do we see? Well, we see a crossover on the 4-hour chart going down. That occurred at about the same time, and in fact, this is always almost always a strong indicator. When you see the MACD crossing over at the same time to the derivative oscillator, which is represented on our chart by a red box, a half-toned red box. We also have a candle showing a lot of indecision. It is a confirmed red down candle, just one. Solid red down candle, more like a cross, again showing some indecision. We're still above the 2-day trend line, so we'll continue to monitor this. This is just the short chart confirmed going down, but a strong turnover and a strong build up in, I guess you would say build down, in the derivative oscillator. So continue to watch that in the total market. Now let's see, we'll go back to our 2-day chart and we'll take a quick look at SPY. What is that? Well, that is again an exchange traded fund. It tracks not the total market like IYY, but the S&P 500. S&P 500 is a lot of volume of the total market, so it many times is similar to IYY, but it's different on many occasions. We can see that it too crossed over going up back on the 5th of October on our 2-day chart. It's continued to move up. It, like the total market, was up the exact same amount for the day, 0.43%. We've got strong open green candles moving up. We're above the 2-day trend line. Derivative oscillator has lost a little bit of its speed. It's gotten a little shorter over the last 2-day candle. Still a good separation, a good divergence between the MACD and the signal line. So we have confirmed up moves on the big chart. Now, when we revert back from that chart to the 4-hour, again, the half-day chart looks very similar. Actually, we don't have the crossover going down yet in the derivative oscillator, so we don't have a red box in the derivative oscillator for the down move, the crossover going down. So pay attention to that, still well above the 2-day trend line. We've had some action here recently. Again, above the 2-day trend line, but some action where it's either touched the line or crossed through it going down, and then the market continued to move up. It is interesting when you watch, though, on the 4-hour chart, this isn't reflected on the 2-day chart, there is a divergence of sorts. You've got the MACD reaching a much higher level than it's even reached with a much higher price. Now, if we go back further, we can see where the market had reached other highs before a huge drop-off. That's all the way back in August when we had some remarks from the Federal Reserve, but we had a higher actual MACD movement back on the 12th or so of October, and we've seen the market continue to move up higher but the MACD hasn't reached as high a highs as it did back then. So that's something to pay attention to as far as how long these gains are going to go. When you have divergences there, it's just interesting to watch those things happen. Now, let's go ahead and go back to our 2-day chart. And let's take a look at the Qs. The Qs was down 0.45% technically for the day, but again, the type of candlesticks we use, we're using a 2-day candle. So for the Heikin Ashi type of candlestick we use, and you can read more about that online at Investopedia. You can do a Google search, look up first Japanese candlesticks if you're not familiar with those, and then the Heikin Ashi, which is Heikien-Ashi. It's a type of candlestick that we like to use. It has an open box for upward movement and then a closed red box for down movement, and it gives you a much better flavor, I think, for the actual price movement that's occurring in the market and whether up moves or down moves in a shorter period are as strong enough to actually pull the entire market down. We continue to see up moves in the MACD. In fact, it crossed over like the rest of the indexes, the IYY and the S&P. It crossed over on the 5th of October, moving up, and has continued to move up strongly. Derivative oscillators gotten a little bit shorter over the last couple of days, and still a nice divergence between the MACD and the signal line. If we revert back to the 4-hour chart, what do we see? We see that it too crossed over going down. Still don't have the derivative oscillator crossing with it. But again, it's our first red candle in quite a while. Has both a top wick and a bottom wick on it. A little bit of a cross there. You could look at that in Japanese candlesticks as there's some questions, the market struggling with itself a little bit. But again, a filled red down candle. That's important to pay attention to. Above the 2-day trend line, so continue to watch, but we do have a confirmed down move. Now, it could do the same thing it did in the market back on the 21st, where it crossed over and then immediately crossed back the following day. So pay attention. We will continue to do that as we get into this week. Again, still on all 3 of our big charts, we are in confirmed up moves on both the IYY, S&P 500, and the Qs, and above the 2-day trend lines. Now, lastly, let's go to gold. It was down for the day 0.38%, but we can see that gold in our 2-day candle is down substantially. It crossed over going down on the 2-day candle. At the same time, the derivative oscillator flipped over, always something we like to see, as I said earlier. But the chart we really pay attention to in gold that has worked for us time and time and time again is this 4-hour chart. It is a beautiful chart. It has worked crossing over, going down and up again and again and again. And this last one has just been beautiful. Crossed over going down on the 19th. The market moved down very well, then slid sideways around the 23rd, 26th, 27th, then popped up for a day, never crossed over on our MACD, and maybe crossed over just a little bit on the derivative oscillator, which again, we don't pay attention to that in and of itself. The MACD is our big indicator, and then moved substantially over the next few days and has rocketed down, ending at about 109.30 for the week. So that has been a wonderful chart for those of you who are doing trades. And again, all of our trades are virtual. Again, we are not a stock calling service. We are simply an education service, and we talk about trading. When we say that, we're talking about doing virtual trades, and we encourage you to do that, learn it yourself, and then make your own calls. But if you had followed on an inverse fund, and again, that's an ETF that tracks gold, but it's the opposite. It's an inverse of gold. You would have done quite well buying in somewhere around, 113, 112, up to 109. That would have moved that distance in reverse. You could have had even a double inverse fund, would have moved twice that. So again, things are going well with our type of chart that we use on gold in particular. Now, if you don't have this chart, let me tell you how you get it. All you have to do is go to or email us. The easiest way to do it, email us, cw@chartingwealth.com. That's CW like charting wealth, cw@chartingwealth.com. Ask for our chart, you'll get it. It'll be our layout from freestockcharts.com. Also, don't forget to ask us for a link to our 15-minute video that'll teach you how to read a stock chart. It'll tell you what the derivative oscillator is all about, what the MACD is all about, and the signal line. It'll tell you how to read the candles. It's just a great short video that will get you started in the exciting world of being able to read a stock chart and invest in the markets so that you can start your virtual trading. Thanks so much for listening to us. We love to hear from you. Write us anytime, cw@chartingwealth.com. Follow us on Facebook and Twitter. Go to our website, sign up for our daily newsletter. Thanks so much. God bless. Wish you the best this week in your investing.